Hello and good afternoon. Hope everybody's keeping well in this COVID-19 pandemic. Okay, today this financial spreadsheet is about the weighted average cost of capital. It is about the product and the risks taken per million of firms in the taxes and amount of quantities and debts that are required to be projected in finance. So now I'm going to have to start and calculate results. So in the first results, I have to calculate the 1 plus 1 minus d divided e. So debts divided by equity and then the unlevered equity beta. The yellow cells are down yellow are the headings that are in the firms. So the amount of equity, amount of debt, the tax rate, and equity beta. Yes, so now I'm going to calculate the results. So 1.3. Okay, unlevered equity beta. Now the next one's going to be a separate sum table. Okay, so that's the results finalised for the first half of the weighted average cost of capital. So now we're going to go down and go to the project and acquisition. Debt is 40%, equity 60, and the tax rate is 40%. I have to calculate the results now, which is the same as before, and also calculate the project equity beta. And I'll calculate the unlevered project beta. Project equity beta. Right, so now we're going to the next section. Here we have risk-free rate, which is equals to yield on long-term treasury bonds. Then the market risk per million, 7.40%, is equals to historical average access return of SAB of 500. Now results, calculate the project equity delta. Market risk per million. Equity risk per million. Plus risk-free rate equals to 26, which is here in the data section, 6%. Cost of equity. So that adds up to C32 just plus free rate. Now plus the equity risk per million. The answer is 6% because there's no percentage in the equity risk per million. Okay, so now we're in one last section. Go into the results for the last part. So after tax cost of debt, equals C18. I'll show you where that is. It is debt by 40%. The weighted cost for after tax cost of debt. So multiply the first 5.4% by the weights to 2.2%. So now we're going to cost of equity. C33, which is cost of equity here. Press enter. Now the weights. C19. That is equity by 60%. The weighted cost. Again, first one 6.0% multiplied by the 60% weights. Now we're on one last part, which is the actual overall of the weighted average cost of capital. Simply just add in the weighted costs of the two sum tables, so E40 plus E41. And the entire weighted average cost of capital answer is total of 5.8%. So that is the end, and that's it for today. So thank you all for watching this, and I hope you all keeping safe. Wash your hands, stay safe, and I'll see you all very soon, and have a great weekend. Adios.